Bill Gaylord here, and I'm with my friend Stuart. Stuart's got me now on both YouTube, he's got me on Facebook Live. We are going all out, and we'll be on LinkedIn, I know, shortly as well. So, anyways, welcome to tonight. Tonight's topic is absolutely great. I think you'll love it. It's on buying power and how consumers, homeowners, have just got some more buying power that have been passed their way. We'll go through that and why you do have more buying power now. It's unbelievable what's going on in the markets. So we'll get into that a little bit. But first of all, want to just kind of give you a little bit of background on me, what the show's about. You know, I've been in the mortgage industry for 27 years, have been in the real estate side for over 33 years. We've got the Gaylord Hanson mortgage team. I looked at year in, year out as one of the top mortgage teams in the country. Last year, we did over 410 million in loan volume. Love helping people, and most of it is we hear it all the time. It's like, oh man, I have to go get a mortgage, and there's a mystery. Who's pulling all the strings behind the mortgage, and what's going on, and who's the Wizard of Oz? So what we're trying to do is take the mystery out of mortgage and empower you to go out there and make educated, informed decisions and have fun buying a home. No one really wants to get a mortgage. I'd rather not have a mortgage, but what you really want to get is the house. And so the mortgage is the vehicle to get into the house, and you want to go out there and make sure that you are informed and know what you're getting into from a mortgage standpoint. So with that said, every Monday we do this live at 6 p.m. and then it'll be posted up on YouTube, so you can go back and find out what our topic was and give us feedback. And if you have other topics that you'd like us to discuss, we'd love to hear from you and provide that information. I can get going. I can talk a lot about things, and I have a lot of fun doing it. I'm passionate about the mortgage business, about real estate, and really want you as a homeowner to succeed. And it's so interesting to me to see the statistics on homeowners. And homeowners have 45 times the net worth on the last report from the National Association of Realtors than a renter. 45 times the net worth. So as an example, if a renter has $5,000 as their net worth, cash in the bank, a homeowner, well over $225,000 in net worth over a renter. So it's so important to consider buying a home, and I want to bring this information out to you. So we're going to get into the topic of you just got some extra buying power. We're going to go into the reasons why you got the buying power and how you can utilize it. And I think it's super important right now to really consider taking that buying power that you have right now, putting it into the market and building your own wealth. Build the wealth for you and not the landlord. Build it for you. And let's talk a little bit about this, COVID-19. And what that stands for is a coronavirus infectious disease in 2019. So they call it COVID-19. And that's wreaked havoc in the global markets. And there's just a lot of uncertainty going on throughout the globe in regards to the, financially, how's it going to impact companies? How's it going to impact imports, exports, all that stuff? No one really knows. But whenever there's uncertainty in the market, it becomes, where do they go? They want to go to what's called a safe haven. They want to put their money in a place where it's not going to drop, and they feel comfortable that they're going to get a rate of return and not lose a lot of value in the money that they have. So today, as a matter of fact, the stock market, the Dow Jones, dropped over 1,000 points today. It was over 3.5% drop in the Dow Jones Industrial Average. And when the stock market reduces or it sells off, the monies that are going from the stock market, they move into the interest rate market. They move into what's called the bond market, 30-year bonds, 10-year bonds, the mortgage-backed securities, which is the mortgage interest rates, and the 10-year bond. The 10-year bond is really one of the bonds that is kind of the bellwether of what happens with interest rates on the mortgage side. So we'll get into that. But So the stock market is a little bit nervous. They're a little bit spooked. They sold off and are moving the monies into the interest rate market, which is safe haven, and they can make sure that they're going to get at least some kind of yield or some kind of return on the money that they have. So they move it over to the interest rate markets. This, of course, there's a lot going on, and it's really sad to see. And certainly, I hope that we get really a handle on this very quickly, just for everybody's sake. It's not a fun situation. So we'll get through this. And I'm just talking strictly about how financially what's happened in regards to interest rates and the stock market. But are the stocks in trouble? I don't know. Certainly today was a very big bad day on the stock market. If you look at it from the standpoint of a longer term period, stocks are still really good. I mean, they're over 27,000 on the Dow Jones Industrial Average. The high on the industrial average was like 28,400 or somewhere thereabouts. And so stocks are still in pretty good shape, but they're moving. Again, they're moving from the stock market into the bond market, which is the interest rates. And that has caused the interest rates to drop. So when monies flow from the stock market and everybody wants to get into the interest rate market to secure their rate of return, the value of those interest rates, it's supply and demand. There's only so many bonds that people can buy, so it forces the yield or the return down, which is essentially moving the interest rates lower. So a lot of money is pouring into the interest rate market and again the mortgage-backed securities market, which has had the impact on the interest rates. This is a graph that's really, really, I think, very clear as to the direction that we're going. If you look at where we're at right now, we are so close to an all-time low. We're within points of hitting an all-time low on the 10-year bond, and we're super close, as you can see, to really getting a low mortgage rate right now. And they're roughly in that 3.5% range, plus or minus APRs, right in that general vicinity. They can go up and down. It depends on where you're at. But according to this particular graph, and that I use all the time, rates are really getting close to all-time lows. And this is why you're increasing your purchasing power. This is another graph that I want to explain and go through it. The reason why you're gaining purchasing power is because lower interest rates allow you to be able to afford more of a home. So here's an example, and I want to take it right here. This top graph here indicates a $300,000 mortgage and at 3% interest rate. Now, rates, I want to say, are not at 3%. This is just for illustrative purposes, but I do want to tell you that my friend and the guru in the mortgage industry, Barry Habib, he's an award winner, economic award winner. He's predicted rates. I had an interview with him just last summer, and he predicted that rates would actually go below 3%. So it could potentially be there. But if you had a $300,000 mortgage and your interest rate was at 3%, the principal and interest payment on that would be $1,264. So $300,000, 3%, $1,264. If the rates were to go up by 1/8%, go from 3% to 3.125%, that same payment, $1,264, would actually equate to about a $295,000 home. So you can't borrow as much money with the same principal and interest. If you look at that far category here, at the 4.25, this 4.25 was the actual projected rates by the Mortgage Bankers Association for this year. And obviously, we're now well below that. The prediction was wrong, but that's where they thought they would be. There's so many things that can impact the interest rates from a global perspective, when there's military items that are going on, obviously the infectious disease issue that's going on right now, you can have things that jump into the marketplace that you have no control over, and they happen to impact the market. But let's say the Mortgage Bankers Association was correct, and let's say that they were going to be 4.25%. That same $1,264 principal and interest would only allow you to get a $257,000 mortgage. So that point in the quarter makes a huge difference in the price range that you can actually go look and spend. The reason why I think this is important to understand right now is because we're also in a situation where there's a supply and demand issue with real estate. And I'm going to get into that in just a moment. But let's take a look at what happens, just the difference between 1% in interest rate. If you had a 3% interest rate versus a 4% interest rate, you would pay over that 30 years on a 3%, $155,000 in interest. On a 4% rate, you would pay $215,000. So that's roughly a difference of $60,000 more by 1% in the interest rate. It's a big difference. And the other thing is that if you lose purchasing power and you have to buy at a lower value than really what you would like to afford, that also has an impact on the future appreciation of the home. Typically, a higher valued home will gain more in value over time than a lower value home because of appreciation. That, of course, assumes that appreciation is consistent with a higher value home versus a lower value home. When you get into the $1 million or the higher valued homes, sometimes it does not appreciate quite as much. But this is a significant amount. That's a lot of interest that you would pay in the difference between a 4% and a 3%. So this is just unbelievable with the way interest rates are right now. So let's talk a little bit about values. Again, I say, does anybody really want a mortgage? Nobody really wants a mortgage, right? But what you need the mortgage for is to buy a home. And we want to take a look at, are values of a home going to go up? Are they going to go up in value on the real estate side? We had some talk earlier that there's going to be a recession in 2020. I don't see it. It could potentially be 2021. I don't know. But I don't believe it's going to be a real estate recession. That's my opinion. I just believe that the supply and demand issues right now that are going on in the marketplace is the reason why we will not see a big drop in values, even if we get a recession. And if you look at 3 out of the last 5 recessions, values actually went up in those recessions. And some of the reason why they went up is because the rates went down during that time period. So now is really a good time to take a look at it and buy. Supply and demand. That's the basic economic principle. If you have too much supply and not enough demand, the value of this product will go down. If you have little supply and huge demand, the value of this will go up. So that's what we're seeing in the real estate industry right now. There is just not a lot of supply of homes on the marketplace. And in Las Vegas right now, there's only a 2.3 month supply of homes available to the consumer. In other words, it would take 2.3 months to sell what is currently listed on the market here in Las Vegas for single family dwellings. And so that's not a lot of product. So we've got a low supply and we're getting a lot of demand. And now with the rates dropping, you're going to even see more demand because people will be able to afford it. Now, why does this matter right now? This is relatively new with rates dropping. It's going to come out into the news pretty soon. Rates are falling, and that may get more people interested in being able to go out and actually buy a home. The reason why you should jump right now is because when that happens, that supply could even drop from 2.3. It's not going to be there around. And when you have that low supply levels and you have low interest rates, it's going to drive the values of real estate up. And that, in my opinion, is what's going to happen with values of real estate. And this is why I believe taking action is so important. I throw this slide up because I think it's very, very important to note. If you look at what is considered to be a normal market is considered to be having between 6 and 7 months of supply of inventory, real estate inventory, to be a normal market. When I say normal, it means that the buyers and sellers have equal power, if you will, in regards to negotiating transactions. Right now, as we talked, most markets, including San Diego, including Las Vegas, including Phoenix, are well below that 6 months level. And so that truly is a seller's market. And it's important to note here that even though the seller does have probably a little bit more leverage than the buyer, they're probably going to move on to another home as well when they sell. So they're going to be in the same marketplace that you are when they go to actually buy another property after they sell a house that you potentially want to get. So they're interested in moving as well. So this is a good time right now before everybody rushes into the marketplace and understands that the rates have dropped, they have more buying power, values haven't shot up like they have in the past, and now is the time to actually go out, find a home, get proactive, go out there, take the action, and make it happen. You can make it happen very easily. Getting pre-approved is really the key to allowing you to put an offer in and make your offer very strong. The listing agent wants to do the due diligence for the seller. So if you go in with a pre-approval, and then the seller knows that you're going to be able to close on the home. So it's super important to get pre-approved, take the action. This is a great time to purchase real estate. It's in my opinion, going to be one of the best times that you could see in a long, long time. And that's why you have more buying power now than you've had in a long time. And the values have not shot up yet. And I think that this is a great time for you to get out there and take some action. So if you have any questions whatsoever, I'm happy to help walk through this with you so that you understand the dynamics of the marketplace, the dynamics of the mortgage, be educated and informed so that you can go out there and really, really be beneficial, be an informed buyer, and secure your family for the long term. So call me, DM me, email me. I think you know where to get a hold of me. Would love to talk with you and help you out. So have a great night. We'll talk to you again real soon next Monday. Gaylord is out.